There will clearly be some modest implications of any Fed tightening for some of the tokens that are held broadly as money equivalents, and those would primarily be Bitcoin and maybe Ethereum. The other tokens, and particularly the non-fungible tokens, which I call horses for courses, which are tokens that operate inside networks for particular use cases, the monetary policy implications are essentially irrelevant. For giving an example, if you want to buy an NBA Top Shot digital trading card and you have to go interact with the Flow token to make that purchase or sale, you're not necessarily, that transaction has nothing to do with any thinking about monetary policy or interest rates or the money supply or QE or any of those sorts of things. One of the things that people who look just at buying and selling the tokens don't understand is there are underlying use cases that serve existing communities. They're trying to do something completely separate from just buying and selling the tokens. They interact with the tokens to accomplish something else, the use case for the marketplace or the network, as opposed to just owning the token. And to the extent those grow in usefulness, it becomes monetary policy becomes less and less relevant.
All right, I want to talk more about this, but this may be something that we dig into deeper on another day, because I know you've also got some predictions for the new year.
That sounds like an invitation to come back, Becky. That'd be fun.
It is. I want to have you back because you think very deeply about these things. You've been heavily involved with them, and I think a lot of us could use a little bit of a course in kind of understanding the differences and your thesis behind some of them. But I don't want to let you get away today without making some of these predictions for next year. Getting close to the end of the year, we need to hear these things.
I wouldn't call them predictions, but you did ask me for a market outlook, Becky. Mm-hmm. So I'll give you just a few thoughts, 5 thoughts. One is that if we move into a situation where interest rates are increasing, easy money is turned off. First, as night follows day, emerging markets will shutter. And the knock-on effects of rising borrowing costs, soaring dollar, surging food and fuel prices are always, in my investing career, bad for countries like Brazil and Russia, as well as the emerging EMs like Egypt, Mexico, et cetera. That's kind of number one, and that's just pattern recognition from years of looking at the market. Secondly, I would say to people, don't sell China tech companies, at least at these levels, until the 20th Party Congress in October. Where we'll see if their politics rotate away from nationalism and back to expansion, which is what a number, I think, of very smart people are looking for. Third, I describe this next one as shovel the manure out of your stable, dispose of the frothy end of the market, the meme stocks, Dogecoin, the dodgy SPACs, all what I will call the technical term, all the crap.
Okay, but that's you're differentiating that from a lot of the other new things, Bitcoin and NFTs and others. Yeah. You're saying Dogecoin and things that don't have a specific, that don't have a specific use case.
Dogecoin was started as a joke. It doesn't have a use case. Yeah. It's the fraud, the end of that token market. I would dispose of it. Third, Becky, I would look to space. For the next year or two, space will transition from what you might call a billionaire's playground to a commercialized sector. And I particularly watch the low Earth orbiting satellites, the LEOs, and things like the Elon Musk Starlink project to begin to have private use of space in very valuable, profitable, and commercialized ways. And finally, with crypto, over a year ago, you remember I started talking to you, you referenced it this morning, about the metaverse and the use of NFTs in the metaverse. In the coming year or two, I'm going to predict for you, this is my one prediction, that the new buzzwords will be DAOs, which are decentralized autonomous organizations, and zero knowledge proofs.